Good morning, everyone, and Happy New Year. Welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, it is officially 2025, and Wall Street is sending signs of optimism. With the business environment expected to be favorable this year and the S&P 500 coming off of 2 straight years of 20% plus gains, market watchers have expressed on our show that this does set the scene well for this new year. Of course, we'll continue to keep you up to date on a regular basis here on NYSE TV Live, and you can keep watching us each weekday morning at 9 a.m. Eastern, right before the market opens. Well, we've got a huge show on tap today as we start this new year together. Let's take a look at what's ahead. Now, with the busy holiday season behind us, a doctor is going to join on tips for staying healthy this new year, especially as neurovirus cases surge in parts of the country. Plus, we'll dive deeper into the market outlook covering stocks, earnings, and cryptocurrency. Christine Short of Wall Street Horizon will join me soon on the former. And the American Red Cross is ringing the opening bell today, the first bell of this new year. Its Greater New York CEO is going to come on the show to share how she is supporting 13 million people in the New York region when disaster hits. But first, as we always do, let's set up the trading day about to get underway here at the Stock Exchange behind me. Stock futures are pointing to a solid open on this first trading day of the year, and it comes after 2024 saw the S&P 500 rise 23%. The Dow Jones Industrial Average was higher by almost 13%. The S&P 500's double-digit gain in 2024 added to a 24% rally in 2023, and the 2-year gain of 53% was its best since the late 1990s, when that index rose 66% from 1997 to 1998. Well, with that, I do want to turn to expectations for the year ahead. And joining me now with more is Christine Short, head of research at Wall Street Horizon. Christine, it's great to have you, and Happy New Year.
Happy New Year. Awesome to be here to kick off 2025.
Absolutely. And investors seem to be in an optimistic mood. What is behind that?
I know, it's nice. We're starting off pretty bullish, right? Well, as you said, we've come off an amazing 2024 on top of what we saw in 2023. Expectations for U.S. equities in 2025 is a little more modest. If you look at what some of the banks are expecting, Goldman Sachs, JP Morgan are looking for about a 10% increase in the S&P 500. Certainly nothing to sneeze at. When you do look at the last 2 years, yeah, it certainly is more modest, but they've actually increased that expectation as we went through 2024. So that's always bullish to see. You're going to see some of that trickle into earnings. The U.S. economy is still on a tear. So there's a lot of positive things to focus on for the new year.
Let's talk about earnings, because we do know historically that is the fundamental that drives the stock market.
Yes.
In terms of earnings growth, how are companies looking to fare?
Yeah, so for Q4, we kick off on January 15th in a couple weeks. Wednesday, the 15th, we see JP Morgan, Citibank, Citigroup, and Wells Fargo. So kick off with the big banks as usual. The Q4 season is always a little more elongated just because of the holidays. In any case, they're looking to have a very strong quarter, 12% growth. Overall, the calendar year is expected to post 9.5% growth. So a little lighter than the expectation at the beginning of the year, which is at 11.5%. But still, what a great year. We're almost at double digits. And as we see get into the quarter, we usually see more companies beat anyhow. So we could see that number fluctuate a little bit. 2025 expectations are for 15% growth.
That's pretty strong.
Pretty strong. And usually, you know, coming into the year, again, like it's always a little too optimistic. But to see 2024 only ending of a couple percentage points below what the initial expectation was, gives you hope that, maybe we could. And, you know, the more interesting thing, not just, you know, for stocks as well as earnings, is it's going to be a little more broad-based growth that we see. Big banks have said that. Expect to see not just a focus on the Magnificent Seven, which has been the concern the last 2 years, all this concentration in a handful of stocks. What does that mean for markets? Well, it was okay, right? It turned out okay. However, we see a return to healthcare, materials, industrials, some of those beaten down sectors that didn't have a chance to shine in the last couple of years. Expectations are they start to have a comeback as well.
And in terms of inflation, we know that that is really dictating the path forward for interest rates. Of course, those set the pace of the cost of money that companies can borrow at to grow, to do deals, to do things of that nature. What is the economy telling us about how inflation could impact this?
Yeah, it's interesting because that's one of the more cautionary notes heading into 2025. And it is because the economy's been so strong that we've seen expectations for rates pull back a bit. So before the September 18th FOMC meeting, where we saw the first rate cut in 4 years, the expectation was we were going to see 6 rate cuts in 2025 from the January to the September meeting. It was going to amount to about 3 basis points of cuts. Now, if you look at the CME Group's FedWatch tool, they're only pricing in about 50 basis points of cuts, so maybe cuts at 2 meetings. That's been pulled back because, like you said, inflation's been very sticky. The labor market's been strong. So the things that are sort of good about the economy mean that we're not going to see those rate cuts, and that makes borrowing more expensive, right? Borrowing stays expensive. We just saw mortgage demand drop 22% in the last 2 weeks of December. So folks aren't going to be as willing to borrow money. You know, we've seen M&A and IPOs really suppressed at the investment banks. There was hope that that would loosen up a little bit in 2025, but when you look at some of the Fed rate expectations, it seems less likely. And M&A announcements and closes were the weakest they've been in 2024, going back 5 years. So
wow. It is a factor, obviously, at play here. I'm not sure how closely, Christine, you watch cryptocurrency, but for companies perhaps looking to add crypto to their balance sheet, is that something that you've heard about as we are now in 2025?
Yeah, crypto's been on a tear. I don't follow it closely, but I think my husband owns a little bit less than one Bitcoin, so we've been following. I've been telling him to sell for years, and now he there's expectations, and you read reports. Oh, it's going up to 200,000 in 2025. I don't know what to make of it, but you're right. I have seen companies taking it more seriously as it has been on a tear in the back half of the year. There's certainly some policies that are being laid out under the new presidency that would support and reduce some regulatory constraints around crypto, which makes it sort of enticing. So we'll be looking at earnings calls. Certainly there might be, depending on the company, questions from analysts about what their take is on cryptocurrency, but certainly something I've been watching almost on a daily basis.
Because you do follow those analyst calls so closely, we've been watching some of the data come in. The stock market reacted, obviously, when we had that decisive election result. The fact that there was a result gave certainty to the market. We saw small business optimism rise in the wake of that. Are you gauging that companies do have a better sense of how to navigate this year, and is that factored into these forecasts?
Yeah, so during the Q3 season, a bunch of companies reported before the election, and then, many reported after. So we started to get a trickle of kind of commentary about, okay, we have some certainty around who the next president is going to be. What does that mean for policy? Now, going into these reports, the inauguration is on January 20th. Companies can speak more decisively about plans. We heard a lot about plans last quarter of what would happen if tariffs were imposed. Some companies were going to move production. Some companies were going to raise prices. But at that time, it wasn't solid, right? So going into this next earnings season, we'll hear probably more decisive plans. They'll be planning with more of a compass going into 2025. Analysts are going to ask those hard-hitting questions. So we'll certainly have a better idea of where things shake out.
Christine Short, Head of Research at Wall Street Horizon. Christine, thank you so much for joining.
Thank you again.
All right, well, stay with us because as this new year rolls on, we're going to cover how to stay healthy as neurovirus is spreading in the U.S. An expert will weigh in on how to safeguard against it up next.
If someone came to us 5, 6, 7 years ago and said, can you produce a sugar-free or reduced sugar, low fat or no fat, plant-based, dairy-free, indulgent ice cream, we could not have done that. Today, we have the high-intensity natural sweetener to produce it with low to no sugar. We have the protein-based ingredients that are non-dairy that can replace the milk or the dairy. And we have the ingredients to help impart a very rich, creamy mouthfeel to make the product indulgent and also prevent ice crystal formation during freeze thawing. And so it's a capability that we've built that has made us much more relevant to more opportunities than we ever have had. The original stevia leaf extract products that came out, I'll call them the early generations, did though have, which is typical in early generation products, had a bitter or a licorice off taste associated with it. Since then, we've been able to develop through using natural stevia leaf extract, enzymatic conversions to isolate the best tasting stevia components.
Mm-hmm.
And honestly, they're really great tasting, clean tasting products that are still 300 times sweeter and give you that healthy opportunity to either reduce or completely eliminate sugar in a food product. And then we work from a texturizing standpoint to build back the mouthfeel that's lost when texture, when sugar is replaced. And we call that build back texture.
Welcome back to NYSE TV Live, everyone, and Happy New Year. I'm Kristen Scholler here in studio at the Stock Exchange. Well, this holiday season, cases of norovirus, or the stomach bug, surged toward the end of the year. And according to the CDC, there were 91 outbreaks during the week ending on December 5th, 69 more than the previous week. Well, the CDC says there are generally 65 or less outbreaks per week in recent years. And joining me now with more on this, on how to stay healthy, is Dr. Bob Lahita. He's the director of St. Joseph's Institute for Autoimmune and Rheumatic Diseases. Doctor, thank you so much for joining, and Happy New Year.
Kristen, Happy New Year to you.
Look, as these cases of norovirus spread in certain pockets, and as we get ready to start the new year, what do our viewers need to know in order to stay healthy?
Okay, well, norovirus is a particular virus for which there is no cure. It is a virus for which there is also no vaccine known. It's very infective, and the way you get infected with this virus is to touch things, and only 10 viral particles are required for infection. Now, you may remember cruise ships having an infection. One person has the infection, and the entire ship is quarantined, and the disease goes through a ship like wildfire, and everyone gets diarrhea, has vomiting. Fortunately, it only lasts about 3 days, but it's quite serious. Doesn't kill anybody. It's a self-limited kind of infection, but it makes you miserable. It causes gastritis, which is inflammation of the lining of the stomach. So you have a lot of belly discomfort, and you vomit, and you can have diarrhea and vomiting both at the same time. Sometimes patients who are unstable, like having cancer therapy or having an immunologic disease, will get quite ill and have a high fever. But that is generally not the case. It's usually just a miserable illness. It's particularly bad also in nursing homes, schools, university dormitories, that sort of thing.
So, doctor, what are the best ways to prevent this? Washing your hands, I'm sure, is one of them. Is a mask you still recommend at times? What would you say?
No, I don't recommend a mask because remember, this is not like a respiratory virus. A respiratory virus, an example would be measles, where if you have one person in a room of 40 people with measles, all 40 of those people are going to get measles. So this is not one of those. This is a we call it a fomite directive, meaning if you handle a doorknob and somebody has a norovirus, you're going to get it. If you're washing a diaper from a baby who gets norovirus, you're going to get it. So washing your hands and making sure you don't put your fingers in your mouth if you're in any infected area is a good idea because the virus is transmitted very readily, those kinds of things. If you're caring for somebody with norovirus, you're sure as heck going to get it. So it's one of those really nasty conditions.
Okay. Doctor, obviously with norovirus spreading, it's good that we hit that. But as we start 2025, some people are still getting sick. What other diseases or infections are on your radar right now?
Okay, on our radar is influenza. Influenza, the old regular variant, everybody should have their flu shot. This is the time of the year, actually, beginning of November through February, one can get a flu shot. And I tell you that most of the hospitals that I am privileged to belong to require a flu shot in order to continue caring for patients. So regular influenza. And then there's a lot of concern about H5N1, which is the so-called bird flu. Now, the bird flu is going to infect some humans, particularly farmers, dairy farmers, chicken coop, people who take care of chickens, large numbers of chickens. And as you know, around the country, the bird flu goes through a chicken flock and kills all of the chickens. And the chickens have to be sacrificed, those who have not been infected. Then we're worried about that in cow milk. So that is another issue. The problem here is that there have been, in rare instance, I believe in one in California and perhaps one in Louisiana, of a patient who got a human bird flu. And it was decidedly a variant of H5N1 and pretty nasty. It made that person very sick. With bird flu, the predominant symptom is conjunctivitis or redness of the eyes. And that's how we know you're getting it. Nausea, vomiting, weakness, fever, all of those things happen that you would see with regular flu. I don't envisage anybody in New York City, Los Angeles, or Chicago getting bird flu because it is largely restricted to rural areas at this time, Kristen.
And doctor, of course, listening to you is one way, but what is the best way for our viewers to make sure that they are getting the accurate information when it comes to taking care of themselves as we start this new year?
Well, people need to go on the web. You can go on the web and dial in CDC, which is the Communicable Disease Center, and they will have tips for taking care of yourself with norovirus, with H5N1, with salmonella from eggs. We've heard a lot about that, and that's been a big concern. Infected eggs and infected and non-pasteurized eggs, non-pasteurized milk is a big item. And those things will make you sick. But just go on and Google or go on to cdc.com to keep you healthy.
Dr. Bob Lahita, Director of St. Joseph's Institute for Autoimmune and Rheumatic Diseases, thank you so much for joining. Have a happy and healthy new year.
Thank you, Kristen. You too.
Thank you. All right, well, stay with us because up next, the price of Bitcoin hit a new high above $100,000 a token last year. How high could the price soar in 2025? We'll have those details up next.
Gina, welcome to Floor Talk. It's great to have you on the show.
Thank you. Thank you for having me, Judy.
So, Gina, tell me, how has Bath & Body Works' focus on fragrance driven its success and customer loyalty for the past 30 years?
It's been an incredible, incredible brand, and I'm so honored, actually, to be leading it for the last 2 years. This is actually my second-year anniversary, and the source of it has been just this incredible fragrance-forward positioning. And if you haven't, checked lately, fragrance is on trend for some time now, and we put fragrance in 12 to 13 forms. And what that means is we can have these beautiful candles, and that can be Winter Candy Apple, which, by the way, is celebrating its 25th anniversary today. So to your point about 3 decades of performance, but we can also put that in a foaming hand soap. We can put it in a pocket back hand sanitizer. We can put it in a fine fragrance mist. And while that seems simple, it is actually quite a feat to put a fragrance across all those different forms, and customers love it. They want to smell head to toe with fragrance. So it's a wonderful differentiated business model.
Head to toe and home.
True, right?
So now you recently released your Q3 earnings. What were some of the highlights?
We were really pleased with our third quarter. We beat expectations on the top and bottom line. We saw store traffic and conversion be positive and exceeding the benchmarks that we also track, which was great to see. We also had every major category grow. So that for us, that is body care, that is home fragrance, and that's soaps and sanitizers. So all growing. We had some great newness as well. We're known for our innovation and our newness. We did a collab. The one that we have out right now is Emily in Paris, which is great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. One of the biggest financial storylines entering this year has been the meteoric rise of Bitcoin. In the weeks following the 2024 presidential election, the price of the most valuable cryptocurrency jumped from below $70,000 a token to above $108,000 a token at its peak. Now, this is especially noteworthy as Bitcoin started 2024 below $45,000 a token, and the price of Bitcoin hadn't topped $68,000 a token since a previous surge in late 2021. So what's in store for the cryptocurrency this year? Juan Leon, Senior Investment Strategist for Bitwise Asset Management, joins me now. Juan, it's great to have you on the show. Happy New Year to you. And what can our viewers anticipate from Bitcoin in the new year?
Good morning, Kristen, and Happy New Year to you as well. It's great to be here with you. Well, as you just mentioned, 2024 was a monumental year for crypto. We saw Bitcoin hit an all-time high of 108,000 post-election. Spot Bitcoin ETFs, which launched, saw the most successful ETF launch of all time, with the most assets gathered, over 35 billion. And crypto politicians won big in Washington. Even with all of that, at Bitwise, we believe 2025 will usher in the golden age of crypto. We think this year, Bitcoin will soar to even further all-time highs and end the year past 200,000.
So that is so interesting to hear, Juan, because we do see consensus correlating around that thesis that you have here, obviously as an expert in this space. What is going to take Bitcoin to 200,000, a doubling, a more than double of where it stands now?
Yeah, well, we see great momentum in this space. Even the record inflows that we saw last year, we think are going to be bigger this year. What we've seen in past ETF launches, for example, the gold ETF, is that years 2, 3, and 4 saw more inflows consecutively each year. So we believe with the momentum we're seeing from institutional investors, from governments beginning to buy Bitcoin, from corporations being starting to allocate some of their corporate treasury to Bitcoin, we see those inflows continuing to catapult forward and taking Bitcoin to the new all-time highs that we expect this yeyear. Mm-hmm. We also see investors, professional investors, which were allocating at a size of 1%. We're seeing them now increase their allocations to 2 to 3% of their portfolios. So we're seeing 3% become the new 1% for professional investor allocations to crypto. And we think all of that builds the momentum to go to new all-time highs.
What are the ins and outs of this market? Items like the halving that impacts the supply that's out there, as well as promises for a potential strategic reserve, mean to our viewers?
Absolutely. So Bitcoin is a commodity based on supply and demand, as we were just talking about. The demand is expanding at a rapid pace. The supply is capped at 21 million, and the new issuance of Bitcoin every 4 years gets cut in half. That last halving happened last year, and so new Bitcoin coming to the market is slowing down, and with the rise in demand, then that leads to higher prices over time.
Mm-hmm. What's in the pipeline? Obviously, we talk so much about the cryptocurrency, Juan, but we know it does span other elements and asset classes as well, specific companies that have their own vested interests in cryptocurrency, ones that might benefit this year and ones that perhaps could even tap the capital markets.
Absolutely. We're very excited about the prospects for Coinbase this year. We think it can surpass Charles Schwab as the biggest brokerage in the world. Currently, Coinbase trades at a market cap of 62 billion. Charles Schwab, 135 billion. We think Coinbase has the potential to triple over this coming year based on the growth in stablecoins and the revenue it's earning from that, based on its what's called Base, its layer 2 network that is now the fastest growing layer 2. All of that means incremental revenue. So we think Coinbase can soar to past $700 this year and become the most valuable brokerage in the world. Mm-hmm. Additionally, exciting for the capital markets is we think 2025 is going to be the year of the crypto IPO. There's many private companies in the pipeline that are getting ready to go public. One of them, which I believe may go public at the New York Stock Exchange, which would be very exciting, is Circle, which is the second largest issuer of stablecoins, which I mentioned are an area of fast growth. And we believe with the pro-crypto administration and SEC coming in, we will see legislative clarity that will allow things like stablecoins to flourish.
And in terms of what this means specifically for some of these meme coins, I know people following along at home probably are very familiar with the meme coin mania. Juan, weigh in on that quickly.
Absolutely. Meme coin mania has taken off, and we think it's going to go even bigger this year, especially with what are AI agents launching tokens. So we've seen protocols like the Virtuals protocol that over the last month has launched more than 11,000 AI agents that are now transacting autonomously on the internet. And that is creating a lot of economic activity that will grow exponentially with the rise of these AI agents being able to act autonomously and create economic activity on the internet.
Juan Leon, Senior Investment Strategist for Bitwise Asset Management. Juan, thank you so much for joining us on our first show of the new year.
Kristen, it was a pleasure. Have a great year.
You too. All right, everyone, well, stay with us because up next we will have the opening bell.
I do want to talk to you about space investments right now are really flowing into startups. From an investment standpoint, talk to me about how the current economic climate we're in could impact the sector.
It's been a couple, few difficult years in the capital markets, but things are starting to turn around. I think the Fed's decision to take interest rates down, 50 basis points cuts, certainly impacting the public markets. It takes a little while for that to flow through to the private markets, but we are starting to feel some optimism, and there's a lot of reasons to feel optimistic when the last couple of years have been pretty uninspiring. So it's a good time just generally in the capital markets. Capital continues to flow. Innovation has continued to push forward in the space economy. And we're seeing not just, SpaceX and the big names, we're also seeing other new companies come up, make names for themselves and raise significant capital to go out and execute their plans. Every quarter we produce our Space IQ, Space Investment Quarterly, talking about the flows of capital, startup activity and investment trends in the space economy. We just published our Q3 report. We're showing $330 billion invested since SpaceX came online into 2,000 unique space companies.
Talk to me more about those key takeaways that you found in your Q3 report.
A few of the big ones, right, is that SpaceX has gone from underdog to apex player, right? They were tapped by NASA to go and rescue the NASA astronauts that were stranded on the International Space Station by Boeing. A big quarter for SpaceX. And they haven't had to tap the capital markets since 2022. They've raised a lot of capital, so the investment dollars have been strong in part due to SpaceX and going out and raising capital for what they're building. Now they're fueling their growth with revenue. So there's a big gap in the investment data that other companies are now starting to step up and fill. AI and geospatial intelligence data. So applying AI to data from space. We have way too much data coming in from orbit. We have decades of archived data. It's way too much for humans to get their arms around unless you
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, in just a moment, the American Red Cross will ring the first opening bell of 2025. The organization, which was founded way back in 1881, shelters, feeds, and provides comfort to people affected by disasters. In fact, the American Red Cross says it supplies about 40% of the nation's blood. The organization also teaches skills that aim to save lives, distribute international humanitarian aid, and support veterans, military members, and their families. Later in today's show, I'll sit down with today's bell ringer, Doreen Thoman Howe, who was appointed as the regional CEO of this greater New York region earlier this year. She oversees Red Cross service delivery, supporting 13 million people who live across the region. That includes New York City, Long Island, Westchester, and Rockland counties, as well as Greenwich, Connecticut, and West Point. Let's take a listen to the first opening bell of this new year. All right, we are officially off to the races here at the New York Stock Exchange. Stocks opening for trade in this first session of 2025 and opening with optimism and momentum behind them. Joining me now with more is the Einstein of Wall Street, as we call him here at the New York Stock Exchange, famed floor trader for decades, Peter Tuchman, joining me from where else than the floor. Peter, Happy New Year.
Hey, Happy New Year to you, Kristen. How are you, my dear?
It's great to have you on the show.
Thank you so
and
much.
No one better than to give us a sense as to what is happening, the pulse, the sentiment, Peter, on the trading floor as we start 2025. What is it?
You know what? Look, I'm really excited. Look, it was one of the greatest years of all time. We were up 25%. We actually had 58 record highs this year out of about 220 trading days. More than a quarter of them hit record highs in every indice possible. But of course, everybody was hoping for this, what they call the Santa Claus rally, which is actually the 5 last days of the year, trading days, plus the first 2 of the new year. And I think, look, we went a little bit sideways with a little bit of a pullback, legitimate profit taking on the last couple of days of the year, but I think we're up about 32 handles here, so it's a solid coming out of the gate. 2025, we're in good shape.
That's great to hear, Peter. And for our viewers watching, I'm sure they're probably familiar with the Santa Claus rally because we do usually get it. Does it mean anything? Does it portend anything that Santa Claus might not come to Wallenbroad this year?
You know what? I think he's here. I think he's been here all year. You know, how much more could we ask for than a year where you had the Nasdaq hit 20,000, the Dow hit 45,000, the S&P hit 6,100. These are real numbers. These are landmarks. This is real money being put to work. So, you know, think about it. It was not an easy year. There were a lot of obstacles with interest rates and inflation, with 2 wars happening globally around oil and whatnot, and obviously the polarity around the election. Yet the market continued to forge on. We had about 7 small pullbacks, consolidations through the year. Every one of them was rebuffed by a major bullish rally. We're in the midst of one of the greatest industrial revolutions in AI and tech. So I don't think we can ask for more. And now, you know, and happily, we're here on the green side. Everything on that screen is green today. So that's a good thing.
It is good to see. And of course, the best 2-year stretch that we had seen for the S&P 500 since the late 1990s. Peter, I know you were down here on the floor during that stretch as well. Back then, the S&P gained 66% in 2 years. We're looking at a gain these past 2 years of 53%, with many market watchers like yourself expecting the momentum to continue. I know you do follow the technology space closely, Peter, as well as AI. What are the themes, the positive bits that we can gain in that sector that could continue to drive the narrative this year?
You know what, look, I think people have been a little bit scared of AI, how it may outsource human beings in all different fields. I'm kind of the cup half full guy. You know, I do a show with Dan Ives, who's one of the top tech analysts in the world, and we have a show every week talking about AI, talking about this industrial revolution. I think it's going to impact every field, every sector in a positive way. I think we're going to start to see secondary and tertiary effects on different stocks, whether it's Microsoft, Google, Amazon, and all of that. But I think it's here to stay. I don't think it's a bubble at all. You know, people way smarter than me are calling this something that's grand, amazing, and an actual revolution. So I think people should take heed of it and be on the right side of it and not think that it's really going to outsource humans in any way.
Peter, I'm sure you were down on the floor when President-elect Donald Trump and key members of his cabinet visited just last month in December, celebrating the opening bell in early December. What is his administration, incoming administration, mean for the markets?
Look, you know, for before the election, I think some people's fears were that he was going to, you know, go get aggressive and a bit bullish posture with China and with tariffs. And my gut is, by bringing Elon Musk into the inner circle and sort of trying to sort of cushion himself against any kind of bullying with the tech sector per se, I think we're okay. I think we're going to be in good shape. You know, he talked about it. I know you were talking about the last guest about crypto. Mr. Trump did talk about the that we are going to be the kingdom of crypto, the United States, and then we are going to have a fund of $21 billion worth of crypto as we do with petroleum. So I think that's going to be a good thing. I think we're going to carve out any aggressive tariff and China story that would have made people fearful of Mr. Trump's attack on that sector. I don't think that's going to happen. I think that all hands are on deck for a super positive year across the board. I think he'll be good for the markets.
All right, Peter Tuchman, also known as the Einstein of Wall Street, as we like to call him, down here on the Florida Stock Exchange. Peter, great to see you and Happy New Year.
Happy New Year to you, Kristen. Thanks for having me.
All right, well, stay with us because up next we'll get an early look at what venture capital firms are focusing on the new year ahead as we set up 2025. Stay with us.
Sharon, always wonderful to see you. Welcome back to Floor Talk.
Thank you. I love being here, as you know.
Oh, love having you. So you're here today. You actually just reported your third quarter fiscal 2024 results. So tell me, what were some of the highlights?
Well, thank you. Yes, we did. I think the biggest highlight is that it was the best third quarter in the history of the company. So that's a strong highlight. We were up 11% on our revenue and up 26% on our pre-tax profit. So very strong quarter. And I do want to mention, though, that in our fourth quarter year to date, also good, but we saw some softness in our e-commerce business, so we did narrow the guidance a little bit, tweak it a little bit, but we're still expecting right now to end the year with the fourth consecutive year of record results on a rev perspective.
All right, so Sharon, talk about your long-term strategy and your goal to continue expanding globally.
Our founder, Maxine Clark, who started the company well over 25 years ago at this time. And by the way, this is our 20th year on the New York Stock Exchange. But she always said that a hug was understood in every language, particularly a teddy bear hug. And the experience is such an important part. It's the way so many of our guests and our customers often meet Build-A-Bear, if you will, for the first time, is to come in and make their own bear. So that piece of the puzzle is important. And those three new business models are corporately operated, but that's the model that we've always used, actually, and then partner operated and then franchising. So it gives us a lot of latitude, and the latter two are more capital light, and that's what's allowing us to build out our store base. We have opened in 6 new countries in the last quarter, and we're now up to 20 countries, and we're going to have up to 600 stores by the end of this year, up from 500 just a few years ago.
Very exciting,
Yes.
Very exciting. So tell me, are there any new partnerships you've had this year? Anything you want to share?
We team.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. As emerging technologies and the advancements of artificial intelligence drive companies to make the next big splash, what impact is it having across startups? Well, joining me now to answer this question is Jeff Ransdell. He's a managing director and founding partner at Fuel Venture Capital. Jeff, it's great to have you on the show today. We were just talking about artificial intelligence in our last segment. We saw how it fueled early stock market gains in 2024. What will AI bring us this year from a VC perspective?
Good morning, Kristen, and Happy New Year to you. I think Peter did a legendary job of actually framing it all up, as he usually does. But yeah, AI has been playing a massive part of the creative economy in 2024. It represented the majority of all the funding really for the private markets last year. We anticipate that that's going to continue to drive forward in 2025 in a very big way. You've got major. I think how we look at it at Fuel Venture Capital is almost like the gold rush, right? You had the people who were selling the picks and the shovels, and you had the people that were literally panning for the gold. And I think for the most part, you have big companies like NVIDIA that are enabling technologies and supplying fundamental models that are being built out. You have OpenAI. You have cloud providers such as Amazon, Microsoft, Google. They're really driving the majority of the play in AI. Where we are focused in the Fuel Venture Capital is really downstream a little bit, more of the early stage stuff, AI applications that end consumers and companies around the world will be using on a daily basis.
And what are some of those innovations, even companies, Jeff, that look most attractive to you as we start 2025?
Well, I think from an IPO perspective, and I think that that's really one of the big things that are going to be driving the private markets in 2025. Liquidity has been a big issue for the last 3 years. I think that liquidity will be coming back into play. As Peter said, 2025 is looking to be a really strong year. And with that, we'll see liquidity. We'll have more capital coming back into the private markets. I think for me, one of the biggest IPOs that we're expecting to hit from the private sector this year is CoreWeave. I'm really excited about that. We look at that as being about an 87% probability to IPO this year, which is a huge infrastructure for AI developers. As I was saying earlier, this whole picks and shovel theory. This is an organization that's providing AR developers the ability to create the technology that they're creating. Last post valuation in the private markets is $23 billion. And again, we're expecting it to go live this year on your exchange.
How does the interest rate forecast for this year of 2025, Jeff, impact your business, the way that you do business as a venture capitalist?
Well, as we were just talking about, right, the liquidity for the last 3 years has really created a struggle for the private markets. As we all know, we saw interest rates hit ceilings that we haven't seen in a very, very long time. But the Fed started the path forward back in September of last year, and assuming inflation, remains low, we anticipate that rate cuts should keep pace, and the markets will react accordingly. I think, as Peter was saying, 2024 was such an amazing year for all of us in the public markets. And what typically happens is the public markets lead the way, and it eventually ripples down into the private sector. And so we at Fuel Venture Capital are expecting 2025 to be a great year with respect to interest rates continuing to come down as inflation is steady. And that interest rate lowering will help create a tremendous amount of liquidity that I was just talking about before. The IPO markets have really been shut down for the last 3 years. M&A has been very struggling, and we think that lower interest rates, lower borrowing costs are going to help drive that liquidity issue and open up the markets in 2025.
Jeff, thank you so much for joining. Of course, good to get the take on VC as we start 2025 together. That's Jeff Ramsdale. He's a managing director and founding partner at Fuel Venture Capital.
Thanks for having us.
Well, one tech startup making news in recent months is the cybersecurity platform HackerOne. It appointed Kara Sergu as its new CEO this past fall, and she spoke to my colleague Trinity Chavez about what excites her most about the role. Take a look.
I'm very excited about the HackerOne mission. The largest data breaches in history have come from cyber criminals exploiting just a single vulnerability. And defenders are now tasked with finding and fixing all of these vulnerabilities, whereas the cyber criminals only have to find one. And AI models, as they're proliferating across a bunch of organizations, those are just the next frontier that cyber criminals are starting to exploit. HackerOne levels the playing field between defenders and those cyber criminals in a way that no other company does.
And how is HackerOne? I know it's known for its human-powered security approach, right? But how do you see this model really evolving, especially with the rapid advancements of AI and automation?
Well, we're working to completely eradicate and eliminate all critical vulnerabilities as well as AI safety issues. And we're doing that through a combination of our human-powered security as well as AI sophisticated models that are complementing the work that our security researchers do. So we're really bringing the two together. We believe that together, that is the best solution for organizations to find and fix these issues.
Now, during your time at F5, you managed a $1.3 billion product business. How has that experience shaped your approach in leading HackerOne and driving innovation in cybersecurity?
I had an incredible experience at F5, and it was awesome to see and run a business at that scale. It also gave me a lot of insight into some of the issues that companies run into as they grow larger. And I'm really excited at HackerOne to then take those learnings to a company that's earlier in its founding and earlier in the stages of maturity so that I can apply a lot of those lessons so that we can scale more. I think there's a huge potential here for us to build an organization that is really having massive global impact in finding and fixing these issues in our security and our AI models.
And right now, what are your immediate priorities for HackerOne? And what longer term goals do you have, especially as we head into 2025?
My immediate priorities are expanding the use cases that the HackerOne platform has so that we can better serve our customers, both enterprise as well as more mid-market customers. I'm also working on expanding and growing the community of security researchers that we have. HackerOne has the largest community of affiliated security researchers, about 2 million. And then the third area that I'm really focused on is making sure that we keep trust with all of the ecosystem that we work with. The trust is the foundation of how such a model is going to work and foster and grow. So those are my 3 areas that I'm focused on.
Talk to me more about your clients. I know that our parent company, Intercontinental Exchange, is also one of your customers.
Yeah, our customers are some of the largest organizations in the world. So if I look at some of the industry leaders, we've got folks like Coinbase, General Motors, GitHub, Goldman Sachs, the US Department of Defense, the UK Ministry of Defense. It's really an amazing list of customers that are using the HackerOne model to go and find their most novel and elusive vulnerabilities. We're very, very fortunate to have the customer base that we have.
Stay with us, because up next, today's bell ringer is going to join me to discuss some of the American Red Cross's biggest initiatives for this year. Stay with us.
So at DailyPay, we're really tackling the paycheck to paycheck cycle that so many people are living in. And we're doing that by a pretty simple concept, actually, disrupting the last thing that people wait for in life. If you think about the things that you wait for, right? You don't wait for your shows, you don't wait for food, you don't wait for a ride. Even if you're sick, you don't wait to see the doctor. You just get on telemedicine. But yet, people go to work every day and then wait 2 weeks or more to get paid. And it's creating this paycheck to paycheck cycle. So we are dismantling that by bringing earned wage access to people that can work and get paid in the same day.
And you actually work a lot with NYSE listed companies.
We do.
Talk to me about why you think your concept resonates so deeply with companies like Target and Kroger.
Well, companies like Target and Kroger, they see it is always incredibly difficult to hire and retain frontline workers, regardless of whether the economy is strong or whether we're in a weaker economy. It's always a challenge of really being able to retain great people on the front lines. And so they work with DailyPay because they've seen that when employees are using DailyPay, they stay longer. They're more engaged with their employer. And in fact, they feel like they're in a situation that's a win-win with their employer.
How is earned wage access impacting the overall employee experience?
Earned wage access is an incredible impact to the employee experience. In fact, our clients will tell us that it's the top adopted benefit across their workforce. And it's because it's something so simple, right? If you think about, people are working to obviously have money to pay their bills. But those bills don't always come in 2-week increments. So it's very hard to plan life, even if you make a monthly budget. If your rent is due before your payday, right, that's not helpful.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. It is officially the first trading session of 2025. The S&P coming off 2 straight years of 20% plus gains. The last time we saw gains like that was in the late 1990s, and many market participants think that momentum can continue in 2025. As you see on the screen there, fractional gains across the board for the major indexes just about 20 minutes after the market opened. Earlier this morning, the American Red Cross rang the opening bell here at the Stock Exchange. And joining me now with more as we start this new year is Doreen Howe. She's a regional CEO of the Greater New York area for the American Red Cross. Doreen, thank you so much for joining and Happy New Year.
Happy New Year. Thank you for having me.
What brings you to the Stock Exchange today?
So January is National Blood Donor Month, and we're so thrilled to be here at the Stock Exchange to celebrate blood donors and to encourage others to roll up their sleeves this year.
What's the best way for our viewers to participate in that?
Well, let me just say, for 50 years, January has been National Blood Donor Month because it coincides with the most difficult time of year for us to maintain an adequate blood supply.
I see.
And so we really encourage folks to reach out to the Red Cross to schedule blood donation and to do it all through the year.
How does the Red Cross, specifically in your region, use those donations for good?
So every 2 seconds in this country, someone needs blood. 42,000 units of blood and blood products are used for patients by hospitals every day. They're used for helping people who've experienced traumas, for ongoing medical care like cancer, for inherited blood disorders, blood transfusions for bone marrow transplants, and for surgeries. So the Red Cross collects and transports those blood products to hospitals and patients who need them.
And in terms of your goals for 2025, January obviously is a focus, as you've discussed. What else is in store this new year?
So the Red Cross, in addition to collecting blood, we have volunteers and staff who every day provide shelter, food, and comfort for those who've experienced disasters. We do life-saving trainings. We support our military through our veterans, our active military, and their families, and we supply 40% of the nation's blood.
Are you able to foresee some of these emergencies, at least based on the data, so that your organization can help?
The need for blood is constant. We know we don't have periods where we have too much blood, and so therefore the need is ongoing, and for folks to become regular blood donors and to encourage their family members to also give regularly is how we can have an adequate supply of blood.
Doreen, any other messages for our viewers as we start this new year together?
Call us at 1-800-RED-CROSS or go to redcrossblood.org and schedule an appointment.
All right, Doreen, we will be doing that indeed. That's Doreen Howe. She's a regional CEO of the Greater New York area for the American Red Cross. Thank you.
Thank you.
All right, well, the health sector, like many industries across Wall Street, is being aided by artificial intelligence. And sticking with the theme of health, our Judy Shaw recently sat down with Chris Manzi, co-founder and CEO of Viz AI, about how this company is using the emerging technology in hospitals and with health leaders. Take a look.
Chris, welcome to Floor Talk. It's great to have you on the show.
Thank you for having me, Judy.
A pleasure. So I want to start off by talking about the company. Tell me about Viz AI and what inspired you to start the company.
I was a neurosurgeon in practice and saw the problem that we're solving, in clinical practice every day. Patients that would come to us, if there were delays in getting to the right treatment, their outcomes would be much, much worse, sometimes resulting in serious death and disability. So Viz AI was founded out of Stanford by myself and a co-founder in 2016 to try and solve this problem. We're an AI safety net. We use AI deep learning in particular to identify different diseases in medical data. So a brain scan or a heart scan. And the AI runs 24/7, 365, so it's on all the time. And if you have a stroke or a brain aneurysm or a rare cardiology disease, and we're able to pick it up and immediately within seconds alert the relevant specialist team who can diagnose and treat you. So it means patients get treated faster, it means more patients get the right treatment, and it improves patient outcomes.
Now, Viz AI has been adopted by more than 1,700 hospitals and healthcare systems. So tell me, what were the factors in getting to scale quickly?
We managed to have a really key dual value prop. Better clinical outcomes, which was published hundreds of times, showing that we reduced disability in patients, and also better financial outcomes for the hospital. We were able to improve their margins. So more patients were being treated, they generated more revenue, and these patients were doing better. So they were spending less time in the ICU, less time in the hospital ward, and therefore they were saving money. And so combining those two together with helping doctors do their jobs more easily, giving them an easy button to do their jobs, meant that we had adoption across the board.
Viz.ai is partnering with 10 global medical device and life sciences companies like Bristol Myers Squibb and Medtronic. Now, how do these collaborations work?
This is a completely new model for pharma and med device. It helps them improve the number of patients who get access to their treatments. So they spend billions of dollars getting these treatments approved. They go through the FDA, they're proven to help patients with a particular disease, but then these patients aren't found in the health system. And so what Viz does, that AI safety net, identifies the patient not just when they're in a specialist hospital, but identifies them no matter which health system they've shown up to, no matter if they've shown up at 2 in the morning or 2 in the afternoon. So more patients get identified, more patients get to that specialist who's able to diagnose that patient and treat the patient. And so it's a new go-to-market model or market development model for pharma, which is really having a big impact. So with Bristol Myers Squibb, for example, we launched we got an FDA approval and launched an ECG-based algorithm that detects hypertrophic cardiomyopathy. And now 2 times more patients are being identified and getting to relevant treatment than there were before.
Chris, you have an announcement about your collaboration and integration with Microsoft. So how is that going to transform the healthcare industry?
Viz.ai is known as the best in breed for specialist workflow. That's for the neurologists, the neurosurgeons, the cardiologists, the oncologists. And Microsoft Nuance is known as best in breed for radiologists and some of the associate specialists they work with. And so bringing the two together means we can serve the entire ecosystem. So now health systems have an integrated solution that serves them across the patient journey from when that patient first comes in and gets the relevant scan all the way through to treatment. We're very excited about it, and I think our life science partners are very excited about it too.
And finally, tell me, what's next for Viz.ai to further drive meaningful change in healthcare with your products?
Really, I want to continue our mission to increase access to life-saving treatments. So from 16, go to 30, go to 50, go to 100. With the Microsoft partnership, we'll be in around 50 different disease areas, which is fantastic. So we just want to create a system so that whenever you go to hospitals, no matter where you are, no matter kind of your socioeconomic status, you have the benefit of an AI solution to ensure you get the right treatment.
Well, congratulations on your announcement on your partnership with Microsoft, and thank you for joining me on Flow Talk today.
Thank you very much.
All right, this is our first show of the new year as stocks are officially open for trade. Happened for about the past half hour, and investors showing optimism as we see fractional gains across the board, and after 2 straight years of more than 20% plus gains on the S&P 500. The last time we saw that was in 1997, 1998, and many market watchers, including those who have joined our show, optimistic about what lies ahead. We hope you'll join us every day here, every weekday that is, on NYSE TV Live. That's going to do it for today's show. From Kristen Scholler, our whole NYSE TV Live team, Happy New Year, and we'll see you back here tomorrow morning at 9 a.m. Eastern.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.